Thank you for joining the last market Carver of 2015. Wish you and your family to have the best wishes in 2016. A couple of things that we'll talk about this week. The first is the oil, which has made headlines all year long, and this time it's with OPEC's annual report. Just most recently, OPEC had met and again sent oil on another leg down after they talked about not cutting production here in the near term. However, this annual report did suggest that production will be curtailed later this decade, which oil was looking for anything of a positive sign and went on a gigantic rally and taking with it oil stocks. That's not a space in the market that we've had an allocation to now for a year. And we still don't see any significant changes. Just like any other asset class that's been beaten down, we'll be looking to good news like this to launch onto a big rally. But for us, the key is to take a little bit of a longer view. Short run, the forces are ahead of the oil space. You have North America still pumping, OPEC still pumping for the time being, and Iran is coming online. At some point in time, our four-legged stools, we monitor these things, will change and invite some opportunity. But for now, we still remain a little bit leery of that energy space. Lastly, I'll talk about REITs. A lot of headline was made on the spending bill signed by Congress a couple weeks ago, and specifically what that means to you as a taxpayer. But there were several other changes in that, including to real estate investment trusts, an investment class that many in the U.S. have. It's not something we've focused on for the past year or so here at Financial Enhancement Group. But things do change, and we do have to take another look at the asset class as the tax advantages that are extended to U.S. citizens are also extended to foreign investors. That asset class of real estate investment trust, at least in the U.S., is missing from most foreign portfolios, especially where you have gigantic pension funds overseas, may find it appealing that they can invest in the United States real estate, something that could be thought of as sturdy over long periods of time. So it's not something I'm saying we're going to invest in, but as things change with tax laws or anything else, we incorporate that new information into our four-legged stool to determine whether it has enough of a positive angle to now invest in. So thanks again for joining this year-end market Carver. You got 3 opportunities to catch our radio show. That'll be on Thursdays, 1570 a.m., 4 to 5 in the afternoon. Saturday mornings on QME, that's 98.7, 9 to 10 a.m. Or Sunday on Shine 99 from 10 to 11 a.m. Thanks again, and have a very happy New Year.